Hey everyone, it's Paul. T-shirt check. You're gonna see this video. It's gonna fit this theme. To the moon. All right, let's get to it. Today's video is on the number one comeback stock for 2023. Number one comeback stock for 2023. And hey folks, stay tuned because this one, yeah, it's worth it. Yeah, this is going to be a stunner. And I'm going to bet that there's going to be quite a bit of commentary on the stock pick that is going to be, in my judgment, in my opinion, the number one comeback stock of 2023. So speaking of that, here's the disclaimer. Whatever I say, actually anything, if you read my Substack, you follow me on Twitter, you're a subscriber to ATG Digital, which is our company. Check us out, atgdigital.media. There is a link above. Subscriptions start at $9.99. Not investment advice, opinion, information, engagement, entertainment, if you will. Past performance, not equal to future results. The future is always uncertain. There are no guarantees. There's no certainty. Third, capital loss is always a likely outcome. Hey, any investment, speculative, trading operation has risk, which means that you can't lose money. Finally, all of our efforts, anything that we do, we can make mistakes. We can have errors. We can have oversights that, can happen in anything that we put out, any comment that we put out. All right. Some folks are going to start to guess very quickly where we're going, but there's good information in this, so just hang out, all right? So, one thing that's really surprising is in 2023, after skyrocketing prices through 2021 and 2022, and a bit of a decline towards the second half of 2022, used car prices are up like almost 9% so far this year in 2023. And if you look at this picture of the Manheim used car index, yeah, that curve up that you're seeing, that's a bit of a surprise. I can say that even I expected used car prices to go back to quote unquote normal. In other words, by now, the demand supply balance would have shifted, because being that high prices would have brought more sellers in and prices would start to move down. But it turns out that the demand and supply balance for the used car market is not so much in balance. Used vehicle inventories are still down 26% from 2019. Let's just set that as the year of normal, so pre-pandemic, right? That's like normal. In other words, 26%. I mean, nearly like 1/3 below the levels we were at pre-COVID, pre-pandemic. What about pricing? Well, the average price of a used car is $26,000 today. I mean, we're talking some big money here. $26,000. Now the peak was 28,000, so it's down a little bit. But hey, I mean, it's up still substantially from $22,000, which is where it was in 2019 pre-pandemic. So this is a market that, yeah, I mean, where the folks that are sort of like looking at the car market, everyone's been expecting car prices to go down. But the conditions in the car market, whether it be new, used car market, are such that it's actually going to, I'd say best case, just stay high. But I think there's a bull case here for really prices to keep moving higher. And the reason is that new car production is still constrained. In other words, shutting down, all car production globally. turns out that we cannot just turn this around in 1 or 2 years because all the part suppliers, chip suppliers, they all shut down. So it is taking a long time to get all of this back together. And that's just for like the existing car production. Then there's the technology transition that is unfolding, which is that we're expected to go to EVs becoming, depending on whose estimate you want to believe, anywhere, from 20 to 30% of all cars that are purchased by 2030. Well, this is going to require, us to put up new plants. We're going to need different parts. And that's going to take some amount of time. You cannot just snap your fingers and put up a plant or get battery supply. This is all going to take some time. So, and then last, legacy car makers. And I contrast legacy car makers as being folks that used to make internal combustion, in other words, gasoline, diesel-based engines, versus Tesla and that set that are 100% all EVs. Those folks, well, they need very high profits from their old internal combustion engine business to fund their EV expansion plan. So they're like, hey, we want nice high profits, and we are going to actually start maximizing profits, not production. Whereas, let's say in the 2000s, they would maximize production, try to get as many cars out as possible, and they might sell those at a loss. No more. They are now looking to optimize their production so that they make as much money as possible. And so new car prices, which everyone has been expecting to go down because they're thinking back to the early days when people maximized production, not likely to happen. So what's going to happen, in my judgment, in my opinion? Well, new car prices are going to stay high or go up. Yeah, I know, that's a shocker. Second, used car prices go back to 2022 highs and make new highs because, hey, if you can't afford a new car, what is your alternative? And you need a car. Well, your alternative is to go to a used car. And given that so many folks have moved away from big cities, have moved to smaller cities or more rural areas, need for cars is still greater than it was, say, pre-pandemic, into limited supply. So, you've got the platform here for car prices to keep going up. So you might be thinking, well, maybe he's going to recommend GM or Ford. Nah, I focus on what I call OGI investments, opportunity, growth, and innovation. Because I believe that the world that is going to unfold is going to benefit those companies, and the stock prices, crypto prices, or those types of investments are the ones that are going to go up. So when I go look at it, there is one company that is in the business of really used cars that seems really incredibly well positioned to really benefit from this demand supply imbalance that most people are not thinking about right now, but is going to drive a massive comeback. And I believe that this stock is positioned to surge higher. They got a ton of cars in their inventory. The stock price has just been cratered, crushed. I mean, so if everything that I've told you is correct, there's massive, incredible upside, which I'm going to lay out for you. And the nature of this company's business is that, well, they buy cars. Okay, I'm going to begin to give this away. They're a used car retailer, right? So you gotta, buy all those cars, keep it in inventory, and it's expensive. So you take on debt. So one key thing that has really made me go and pick this particular stock is that earlier this month, they actually announced a debt restructuring. So as many of you know, interest rates have gone much higher. So this particular issue, which is a risk for many companies if they haven't dealt with it, because interest rates are now 4 or 5% higher. And if you previously had debt at 1% and you have to pay 5%, well, hey, you're going to go through some serious distress. But they have dealt with this issue. They have made a deal with their bondholders. So this risk has been priced in. All right. So the number one stock, this is the big reveal of 2023, is Carvana, CVNA. All right, I made a few mistakes while putting my notes together. It's an $8 stock. That part is correct. Originally, for whatever reason, I was looking at two different sources. One had a slightly higher number. I went with the lower number because that seemed the better source. It was YCharts. $817 million market capitalization. Just a little quick reminder what that is. That's the number of shares that the company has issued multiplied by the stock price. That's the market capitalization. That's the total stock market value of the company. I also want to introduce you, a little piece of education here, to a new term called enterprise value. Remember, I told you that a used car retailer has to use debt. I mean, they got to go buy all those cars and they borrow money to do it. So if you want to take into account the value of a company, including its debt, because remember, those cars have value. So you would use something called enterprise value. And I've given you the formula here for enterprise value, which is you take the stock market capitalization, and you add all the debt and you subtract the cash. Just going to run that through one more time. Stock market capitalization, add how much debt they have, and you subtract the cash, and that comes to the enterprise value. So Carvana's enterprise value, as you can see, there's a lot of debt here, $8 billion, plus of debt. It's a lot of debt. It's just why, what I said, which is coming through that debt restructuring with their debt holders, absolutely critical, absolutely important, without which I would not probably have picked them as my number one comeback stock of 2023. All right, let's go now to how the stock is priced, which is that, as you know, growth investors, which is what I focus on, growth investors, we look at sales, because if you're not growing sales, you're not really growing. Sales is the thing that really, grows your company, grows your enterprise. So that's what matters. So on a price to sales basis, based on, my experience, like Carvana is valued as if it's going bankrupt. They trade for 0.05 times sales. Their financials are their financial year is slightly different. They don't end in December, so that's why these numbers don't seem like they sync up to what you might be thinking, but just go with me on this, all right? So 2023, their sales were like 11.48 billion. For the financial year 2024, it's going to be 13.1 billion, which is a 14% increase. So that by itself is a little bit of a surprise, given that, in my judgment, the way Carvana is currently valued is as if it's kind of like bankrupt. When, hey, they have, a very potent business. If I am right, which is that, car prices, right now are set to rise, at the very least stay high, which is really not in these numbers. Remember, I started this video by saying that most people are expecting car prices to decline, but there's no sign of it. And the underlying demand and supply sort of characteristics are that it's looking to, at the very least, stay high, if not go higher. Well, if that's the case, then these estimates, yeah, they're too low. They're too low. And these estimates also don't account for the recent debt restructuring, which changes their expense structure. So they would benefit from that. And if you go back to their peak price to sales was 4 times sales, so nearly 80 times higher, right? Yeah, so I mean, a big difference. All right, okay. So if we make some assumptions about Carvana, and hey, you disagree, that's fine. I know there's a lot of people that hate this company, that think it's a piece of junk, think they deserve to go bankrupt. That's all fine. I obviously have a different view. There's no need to troll me on this, but some of the assumptions that I want to make here, all right? That their peak trailing 12 months, in other words, you look at, the maximum revenue over any 12 months recently was something like $15 billion. And that was around June ish of 2022. That's, the quarter in which they hit that. Well, Carvana is still, as far as I can tell, the largest online used car retailer. There is one other competitor, it's called Vroom, but Carvana is on a different scale. I mean, they really have massive potential nationally to deliver cars. And while a lot of the dealers and even the legacy used car retailers like CarMax and AutoNation claim to have this capability, it's not something that's quite easy to do. I mean, it costs a lot of money to build this out, and you have to have this capability. And in my judgment, in my opinion, based on everything that I understand, Carvana is sort of like almost a monopoly. They have a unique ability to sell a car 100% online, and that is a special capability. So, in my judgment, as the used car business recovers, they're going to gain market share. And if that's right, then they're going to have even higher revenue because, they're going to take share from the AutoNations and CarMaxes of the world. And if used car prices are going to go higher, as I laid out prior, I mean, okay, I just picked this number, being that the previous peak was 15 billion. If they have higher market share and at higher prices, it's reasonable to think that the next peak is going to be something higher than $15 billion. So let's say it's 20 billion. I plucked that out of the air. And you go with 5 times price to sales, right? Which is their previous, their last peak was 4. But if I'm right, which is that they are a monopoly, they have this unique position, and they can benefit in a big way from rising car prices, higher market share. Truthfully, I think 20 billion, in terms of revenue estimate is low, because the used car business is huge. Well, you're talking about $100 billion stock, which from its current market capitalization of like whatever, 800 million or about $1 billion, and $100 billion stock. So upside of 1,200% from the $800 million market capitalization that I laid out. All right. So that's it, folks. Carvana, my number one comeback stock of 2023. This is a risky stock because they have debt, but still there's something unique going on, which is they have a unique position in the used car business. The car business itself has got so many things going on that right now are not discounted into Carvana's price, and potentially in success mode, this could generate a return in excess of 1,000%. If you like stock ideas like this, well, check into ATG Digital Media. There's a link below, link above. I also have a Substack where I write about stocks like this, where you can read about all this for free. You can get a link to that, and you can subscribe to my Substack below as well. Well, and if none of that is anything that you want to do, at least give us a thumbs up, subscribe to the channel, come back next week. This is Paul saying bye.